What is going on YouTube? This is Dave's Daily Trades coming at you today with another video on AMC. So let's get right into the 1 minute chart. And pretty wild day. Some really nice, healthy price movement. So I'm sure you guys all saw last night's after hours movement. AMC was just going absolutely insane here. So really to start off the morning, we had that first initial jump right around to the 1050 area, which has been a huge level of resistance the past couple weeks. Once we came close to this, we dropped right back down to really the lowest point on yesterday, which was 960. Held that extremely strong, and then traded right around $10 for most of the day. A few spikes above 10, but really mostly flat throughout the day here. We can see some really nice consolidation around the third and fourth quarter of the trading day, which is always nice to see at these levels, especially since there's been massive selling pressure at and around $10. So I would have personally loved to see us break and hold more around that 1050 mark, but guys, there's always tomorrow for that. And we did close the day at 10:05. But let's just jump here and look at the daily chart, see what we got going on for the bigger picture. So we'll zoom in here to really just the relevant data and a few interesting things to point out. So today we did see, that test down to right around the 960 area. But let me zoom in here, and guys, we really came very close to touching that 6-day moving average. We didn't quite touch it, but really that did hold as a strong level there, which really means that we are bullish on the stock, and so is the rest of the market. So that's always beautiful to see. Over here at the MACD, another interesting point. We'll get super close here so you guys can see this. We did have that crossover, which we've been talking about, but we can see this next crossover is soon to come. And really, I'm expecting this to happen, if not Wednesday, but Thursday. And especially if we continue this bullish price movement, we'll absolutely see that strike. And I really want to see us crush this $12 wall here. But as you guys can see, they do not want us trading above that 1050 area. And I think that's the first battle that we have to win. Once we pass 1050, we're absolutely going to have our second war right around the $12 mark. Last thing I just wanted to touch here also was the RSI. RSI is sitting very beautiful right now at 52. And I hope to expect this to continue its climb up into that $70 and $80 or 80% region, which we definitely will see. And I don't see this slowing down because there has been great volume going into this. Also, volume was higher than it has been in the past, I would say just about week. So, of course, more volume, and it's just more people getting invested into AMC. And this could be obviously because of all the news surrounding AMC, Reddit pages, Discord, Twitter. But also, guys, there's so many planes now flying AMC all across the world, and it's just a beautiful sight to see. All right. So let's jump into really the main discussion, which is that borrowed fee. We have seen this absolutely exponentially skyrocket over the past 2 days. So as of right now, we are sitting at 81.8%, which is absolutely insane. And there's been a lot of chatter about this looking like GME right before its first mini squeeze in the run up to right around $450 a share. So this is super bullish sign, and I really believe that with this information floating around the internet, it's a matter of time until new investors start investing more into AMC. And of course, people like me who have been here since January, I'm seeing this data, absolutely loving it, and even adding more to my position. So I know Adam Aaron came out and said 3.2 million investors as of right now, but I can promise you guys this is more like 5 to 6 million investors of AMC. Of course, also the shares, this is really something that fluctuates all the time and something that I personally don't pay too much attention to. And then, of course, the ETFs, that's dwindling down as well. But again, I'm more paying attention to this 81.8% fee because that is absolutely insane. So with that out, I did want to cover this Reddit post that I found online. I thought this was super, super interesting, posted by Wingman2900. So name of this, and I'll also link this down below in the comment section. So definitely give this an upvote because it is absolutely just such a good post. So we'll just dive right into this. So name of it is Citadel is in the biggest catch-22 of their life, and that name right there kind of speaks for itself. So Citadel found themselves in an extremely important catch-22 that involves both GME and AMC. Before anyone downvotes, yada yada yada, whatever. What we know, Citadel has a liquidity test on Thursday. The AMC borrow rate hit 80%, which of course we know that's 81.8%. And GME dropped 11%. We are at the end. How it connects. So why is this relevant, essentially? Citadel's liquidity test coming up is a huge opportunity for them to avoid a margin call. So today, to prepare, they short attack TF, which we all know what that means, out of GME to get those liabilities down and sell some tech stocks, so boost their assets. This explains the 11% drop in a huge red day for the market. And guys, I'll actually take a look at the entire market here now, but it was not looking good. So on one of these watch lists, yep, right here, these are all the major ETF sectors that I have with the financials, energy, utilities, consumer, technology, and all that kind of stuff. Technology definitely saw the worst day. And really what we've been seeing, oh, of course. Now it's going to load for me. All right, but what we've been seeing is tech, big tech, and growth stocks getting hit the worst. And most of this selling, I'm not sure if you guys were watching pre-market this morning, but most of this selling was coming from this morning. Because, guys, we closed, and this is the ETF that tracks the technology sector, but we closed the day at 135 and opened the next day at 132. Quite a price drop. Of course, a lot of people in the market saw this as a buying opportunity, so bought this right back up. But really, at the same time that AMC was spiking, going crazy during pre-market, I believe at one point it was up close to 8%, if not even more. But at the same time, AMC was up quite a bit, and all of the entire markets were down, and everything opened quite a bit down. Of course, some rallies throughout the day, but that is irrelevant. So where were we here? So this explains the 11% drop and a huge red day for the market. By doing this, the hedgies also try and convince apes that we are falling out of the moas. After reading Warden's DD, they realized we were hyped and they dropped the price. However, Warden did talk about a possible short ladder attack and the wedge followed by a slow upward trend. Yes, hedgies, we do read. Of course we do. We're apes. Come on now. The drop in wedge went as expected and they are perfectly fine. And guys, all that's saying is that wedge pattern that we've been tracking on the technical analysis side for the past, 2 months, it's slightly, especially on GME, has fallen out of that wedge pattern, which of course in normal trading would be a bearish sign, but of course the facts are all adding up and on our side. So guys, again, it's irrelevant. They're trying to scare us with that. So this is where AMC comes into play. The AMC borrow rate spiked to 80% and the price went up 10% or so. The AMC apes are hyped, and word is likely getting out as GME saw a similar borrow rate spike before the baby squeeze, like I mentioned before. This is a catch-22 now. If Citadel chooses to short AMC to drop the price, their interest payments will be huge and their liabilities will increase. So of course, you're borrowing shares at a rate of over 80% here. So your liabilities are going to be absolutely through the roof. And that's only to drive the price down just a small percentage. So really, no matter what they do, they're really screwed here. And they have zero options to go to. That I know of at least. They could pull something out. Who knows? But really, this is not looking good for these big hedge funds who are short AMC and GME right now. If they do nothing and let AMC run, they will see the same spike in their liabilities. And this is all before their liquidity test on Thursday. If they fail their test, they will be margin called and the dominoes will fall. So kind of like I've discussed in the past on previous videos. And if you're not subscribed yet, by the way, definitely hit that subscribe button and get updates with all of my new videos that come out. I'm all on AMC right now, and that's really the only stock that I'm following and posting information about. But anyways, like I covered before, these hedge funds, and it's not just Citadel, it's not just one player that's short AMC. There's multiple players that are short right now. If one player gets margin called, it's a domino effect. Because once the margin call comes, price is going to go through the roof, which is going to cause the next hedge fund in line to also get margin called because their liabilities are going crazy. And now they're paying, all this money for a borrowed stock because A, the fee for this is through the roof, and B, the price is exponential from what they actually borrowed it at, so they're paying more. So guys, get ready, hold on tight, because this is going to be absolutely massive, and I hope you all are there holding with me. So with that said, that's everything that I'm going to cover today, guys. Hope you liked the video. If I did provide any value, hit the thumbs up and hit the subscribe button. Help me get to 100 subscribers this week. Thank you all and have a good night.